For the first share of the first part of the webinar, okay, I'll be sharing on what is exactly are the some of the regulation that has been imposed by the Chinese regulator, as well as what are some of the industry that you guys should avoid during this period. And then followed by the second half, Chen will share with you with the similar regulation, what is the difference in impact for the US markets. And then from there, he also share with you guys what are some of the opportunities, as well as he will also follow, share with you guys what are some of the popular counters traded in bullion by some of our investors. And then of course, we'll end the webinar with your Q&A session as mentioned by Terry. So we shall now move on to what actually happened to the China market. So as you can see here, what I've used is the iShare MSCI China ETF. Okay, in case for those of you who do not know what is ETF, ETF is the acronym or short form for Exchange Traded Fund. Okay, and it's basically in layman terms, is basically a unit trust listed in the basically listed unit trust or mutual funds. So the ticker is MCHI, and the reason why I decided to use this exchange traded fund is because this exchange traded funds holds 600 over different China stocks, only China stocks listed in both China and US. So if we can take a look at this chart since February 2021, okay, it has reached a price of $97 US dollar, around $97 US dollar, and has dropped to around 66 US dollar. So that's about that's around 30% drop. So it's basically a very obvious downtrend, okay, because we can take a look that previously somewhere last year, okay, actually there was previously a very there's a resistance here, and then initially it went up, broke this resistance level around $84 USD, reaching the high and then coming back down to last year December low of around $76 USD. And then after which it formed a support and then broke down even lower. So based on this chart, okay, what we can understand that actually China overall market is actually a downtrend, and what actually contribute to the downtrend was actually some regulation imposed by the China. So for today, some of the regulation that we will be briefly share with you guys are the Antitrust Law, Data Security Law, as well as the non-profit education. So what is antitrust law? So antitrust law is actually also known as anti-monopoly law, where it actually prohibits or prevents market dominance, monopoly agreements, price fixing, as well as restricting new products. But the main focus for antitrust law is to prevent market dominance, and know that actually they are interrelated. Okay, for market dominance, it just simply means that it prevents a company to hold more than 60% of the business for a specific industry. And then what can contribute to market dominance are actually monopoly agreements. And with market dominance, it can lead to price fixing as well as restricting new products. So they are very much interrelated. And with market dominance, it will so companies can inflate price or goods and services. So that's why for antitrust law, the main focus is to prevent market dominance and also to ensure that there is a fair competition within the industry. So let's take a look at what are some of the companies or the industry that's being affected by the antitrust law. So for the antitrust law, the major firms that is affected are the tech industry. Okay, actually 34 of the tech companies were being caught by the China States Administration for Market Regulation, short form SAMR, and the tech firm includes Alibaba Group, Tencent Holding, as well as Meituan. For in case some of you don't know Alibaba Group, Tencent, or Meituan, right? Alibaba Group is basically famous, or they're popular for their e-commerce industry, where such as like Taobao, Tmall. And then for Tencent Holding, they deal with various industries, but majority is they're famous for their gaming vendor, but they also deal with music, entertainment, as well as provide IT supports. Then as for Meituan, is basically they deal with food delivery. So, and do take note that only Alibaba Group is listed in as in is tradable in both US and Hong Kong exchange plus POEMs, and then the other two can only be traded in the Hong Kong exchange. So I will now talk more about Alibaba Group and how Alibaba Group is being affected by this antitrust law. So for Alibaba, you can see that since last year, 27 October, okay, it dropped. It has started to drop, okay, from around $300 US dollar to 145. So which amounts to about close to is about 50% drop. So if you were to invest $1,000 when it was at $300 then it will be 500 today lah, basically. So what actually constitute to this drop was actually because since last year November they were being investigated by the regulators for breach in the antitrust, and after which they had to pay a fine for with a US dollar of 2.8 billion, and it's the largest fine paid for the antitrust law. So why they were being fined and how come they breached the antitrust law is because the regulator found out that Alibaba had been using this choose one policy, and this breached the monopoly agreement part, because this choose one policy actually prevents merchants to actually establish business with other platforms if they were to establish business with them, with Alibaba. And because of this, this will lead to market dominance, as more and more of the business will go to Alibaba if more merchants were to establish with them. So there was a breach, and thus contributes to the fall in the share price. Next will be the Tencent holding. So for Tencent holding, okay, we can see that it dropped from 700 over Hong Kong dollar to 400 over Hong Kong dollar. So there is another is probably around 400%, 40% drop in the share price. And for the Tencent, because of the antitrust law, okay, they are being prevented to merge with two of the largest gaming industry. As mentioned previously, okay, Tencent is actually the largest gaming vendor. So, and because of this antitrust law, merger was actually prevented. And because they also deal with musics, they also have to give up exclusive music licensing rights. Okay, so basically any producer that have worked with them and have given the licensing rights to them, okay, they can now also stream their music in other platforms. Next, I'll be talking about data security law. So data security law actually prohibits and prevents cross-border data transfer, as well as the data collection through illegal means. So what does this actually mean? Is in simple terms, any data that has been collected within China is not to leak out of the country. And for data collection through illegal means anyone is not allowed to hack or acquire any other personal information through basically illegal means. Okay. Okay. Next, data security also requires companies to have data intermediaries, as well as online data processing operators. So this means that there must be a platform that allow collections of personal information, and also require the consent of the other party to ensure that this data can be collected, and there must be someone that is handling all these data. So for the data security law, the first victim that actually got hit the hardest was actually Didi. So Didi Global is actually listed this year June, and what actually happened, and Didi is actually, for those who do not know, Didi basically does with transportation, so similar to Singapore Grab. So for Didi, the China regulator deemed that Didi actually their data collection is not strong enough where it may deem that the data they collected may leak out of China and maybe to US. And because of that, they have to stop registering new users, okay, and as well as remove app from all the app stores. And that's only about a few days after they got listed in the exchange, US exchange. And thus you can see a very strong bearish trend, a downward trend basically since the listed note from around $17 US dollar to a drop of the as of last Friday to around eight US dollar. So that's probably around another over 50% drop in share price. So next, I will be talking on the non-profit education. Okay, so for the non-profit education, okay, it simply means that any new tuition will no longer be approved. And then existing tuition center basically required to register as non-profit. So they will no longer be profitable organizations, okay, for tuitions that has been established in China. And all this this non-profit education actually prohibits from giving classes during the weekends, public holidays, and school vacation. So because of this, the tuition the education industry got a very big hit, and some of the companies that got affected, okay, we shall now move on. Okay, the first one was actually the New Oriental Education. You can see that actually the high was around 20 US dollar, and it has fallen to around 1.8 US dollar, that which amounts to a 90% drop. So if you were to once again, if you were to invest $1,000 US, $1,000 back when it reaches 19, then you will probably only receive back about $100. Okay, and then another company that got hit by the non-profit education was the TAL Education Group. So as you can also see that yet another big hit, is a very strong downtrend, a high from $90 US dollar to 4.5 US dollar. So that's also amount to another 90% drop in the share price. And then lastly would be the Gaotu Tejadu, where again another over 90% drop in share price, okay, from a high of 149 US dollar to 3 US dollar. So that's also a big hit. So why we are sharing all this is to let you guys know that during the China regulation crackdown, okay, where China is still, we are uncertain if China is going to impose more regulation, but we do know that due to the regulation that they have imposed, it has contributed a drop in share price for the China market as a whole, and that's why it's best that during this period it's best that you guys avoid the China market as of now, okay? But I also understand that if some of you may be optimistic about the China economy, and that you might want to take advantage of the short-term volatility during this period. So if you guys wish to continue to look at the China market, then there's actually two counters, okay, Alibaba Group and Tencent Holding. Okay, based on the Bloomberg consensus rate, analyst consensus rating, actually these two counters is actually a strong buy. So for those of you who do not know what exactly is a consensus rating, okay, Bloomberg analyst consensus rating actually is a rating ranging from 1 to 5. To put in simple terms, is 5 means a strong buy and then 1 is a strong sell. And you can see that actually for Alibaba Group Holding, okay, the targeted price is actually 265 US dollar, and that is probably about 50% higher as compared to the current price. And for those who know what is target price, right? Yes, it's basically a average forecast price. Is for just for in case some of you don't know. And then for Tencent Holding, it amounts to the target forecasted price is 600 over Hong Kong dollar. So it's another 50% higher than as of the current market price. So for those who wish to take advantage of the short-term volatility, we are very positive about the China economy in the long-term future. Then do note that actually if you wish to trade these two counters, then just to let you guys know that PhillipCapital is now offering a new Cash Plus account where it allows you to trade up to US dollar brokerage fee of 1.88 US dollar flat. So meaning to say, regardless of how many shares you trade, whether is it you wish to trade 1 share, 10 share, or even 1,000 share, we will only charge you at 1.88 US dollar flat. Of course, do take note that there's terms and conditions applied. So if you guys wish to know more on how you can enjoy this low brokerage fee, you can actually call our customer service hotline at 6531-1555. Okay, and do note that, okay, even after 6 p.m., okay, after your work, you can still call them because our customer service hotline operates all the way until 12 midnight. So if you have any account inquiries, okay, you may feel free to call this number, okay, and ask them. Okay, our customer service is more than willing to guide you step by step. So next, I will just pass the time now to Zichen, where he will share with you more on during this China crackdown, how you can find opportunities to increase exposure and also potentially increase your portfolio size. So I'll now pass my time to Zichen.
Yeah. Hi, good evening, everyone. Thank you for spending your evening with us. I am Zichen from the Global Markets Desk. I'm also a US equity dealer. Yeah, I'll be going through like how the regulatory impact differs in China and also in US, and what are the industries that you guys can look out for, and also our market journal where we'll share some of the counters that our investors invest in. Yeah, okay, first I'll be using Alibaba to represent the regulation effects on China. As you can see, the ending of last year, Alibaba got hit by some antitrust issues and their shares had a significant drop. And surprisingly, when they were issued a fine, their price shot up. And reason being is that investors find that with the fine, that the regulators will actually stop intervening with Alibaba's operations and allow them to continue with their operation. But later they didn't know that a few months later, there were more regulation issues like data security and a non-profit institution where they turn tuitions into non-profit organizations. And for this issue, even though Alibaba do not have a very significant stake in the education industry, they still led to a sell-off in their share. This is because this regulatory issue led to affected the investors' sentiment negatively and led to a broad market-wide sell-off. Yeah, so you can see that any regulatory issue in China will lead to investors will react negatively whenever there's a regulatory issue in China. When we look at this, yeah, as what Jonah mentioned just now, this from the Bloomberg Analyst consensus rating, there's still a strong buy for Alibaba, and the target price is around 265. Okay. Then for US, I'm using Amazon to represent them. And they similarly to Alibaba, they had some antitrust issue on 25th May, and their price did not get affected much as compared to Alibaba. And when the US introduced bills regarding antitrust laws, the market did not seem to be too affected by it. As when you look at China, whenever there's some they were talking about some regulatory issue, the market will react very violently. As for this in the US, the market seemed calm. Yeah. So yeah, then you look at the analyst rating from Bloomberg. It's a common consensus of a strong buy, and target price 4,001, and the current price is hovering around 3,003. Yeah. So based on the two comparison, you can see that investors reacted more adversely to the Chinese regulation probe. And with the multiple crackdowns from the past few months, can say that there's probably more to come in the future. And with that, we strongly advise recommend clients, if possible, to put their funds to US instead of in China. And when you're talking about investing US, the hot topic there's been around for the last few months is inflation. And when talking about inflation, we have to look at a personal consumption expenditure price index. It is the preferred gauge by the Federal Reserve. The Federal Reserve is the US central bank. And based on this price index from April to July, it has been increasing steadily, 3.6% in April, all the way to 4.2% in July. And this is way above the Fed's target of 2%. But the Fed still thinks that inflation is transitory. Transitory meaning it won't stay for long. And the reason for them believing that inflation is transitory is because of these three reasons. The first is that the increase in prices, they are not broad-based. They are mostly from sectors that were hit the hardest during COVID, and they are mainly from the goods and services sectors. And the second reason is that large price surges in the durable goods like furniture and cars, they are stabilizing. And lastly, is that the increase in prices were from supply bottlenecks, such as labor and inventory shortage. And they believe that once the labor market improves and inventory shortages starts to dwindle, the inflation should stabilize and come back down. Okay, with Fed's view that inflation is actually transitory, the consumers in US think that it's actually here to stay. As you can see from the New York Fed survey done, the majority of them believe that inflation in a year later will be at a high of 5.2%. And this is actually quite self-fulfilling, because if customers believe that in a year later, the prices of goods will be higher, they will rather spend more now, because for every dollar now, they can get more goods as compared to the future. In the future, they can get less. So why not buy more things now to stretch my dollar? Hence, with more demand now, businesses will be able to charge higher prices, and this will eventually lead to higher inflation. Yep. And with higher inflation, not all industry will fare well. One industry that will be affected negatively is the tech industry, because with higher inflation, tapering, as most of you know, is coming, and also there will be eventually interest rate hikes. And with interest rate hikes, it will hurt their profit margin, and it also lower their share price. How would their net profit margin be affected? Okay, for tech in general, right, they rely heavily on borrowings and to maintain their operation. And with a higher interest, they have a higher cost of borrowing, and this will affect their bottom line. Yep. And as for why their share price will be lowered, is because of with high interest rate, if you discount their future cash flow backwards, right, their share price should be lower than what it is now. Yep, that's why tech in general under a high inflation environment is not a very good industry to be in. Then as for which industry is good, it'll be commodities, because of two reasons. There's a growing demand for it, and second is you can use commodities as a hedge for your portfolio. For growing demand, I'll use three growing trends to substantiate my point. One is the increasing reliance on computer chips. More of our appliances require them now, such as smartwatches, our daily appliances, maybe a fridge, even TVs. Now we have smart TVs, and our cars. As you can see, like over the years, the number of computer chips that are used in a car, they are increasing. Right. So in the past, you had to turn on the headlight by yourself manually, but now when the car is in a dark environment, it is able to turn on the light for you. Yeah. So all these are able to be accomplished because of the computer chips. Yeah. And the second trend is the growth in electric vehicles. As you can see on the chart here, the light blue bar chart represents the sales in 2019, the dark blue for 2020, the orange chart is for 2021. And as you can see, for the first half of 2021, there's always the growth in sales is always 100%, more than 100% of the previous years. So we can say that the trend for EV is definitely growing. And to fuel or to meet the demand for electric vehicles, you will need batteries. And batteries are made from lithium, nickel, and cobalt. Thus, we can say that these metals will be needed more in the future. And the last growing trend is the preference for clean energy. Clean energy, everybody has been talking about it, clean energy, going green and whatnot. And solar and wind is one of the upcoming clean energy, as you can see from the chart here by IEA. But there's a dam in around 2020 and 2021 when the growth was slowed because of COVID-19, where the workers could not get out there to go and install the solar panels and wind farms. Yeah, and how you affect commodities is that all these farms, like solar farms and wind farms, you require lots of metal to build them, a lot of raw materials to build them. For a wind turbine, for instance, just the turbine alone, for one of it, you will need over 200 tons of steel. Yep, and for a wind farm, you require multiple windmills. So you can imagine the amount of more materials you need just to build one farm. Yeah, so the commodities, the demand for them will definitely be growing over the years. Okay, then as to why commodity is a great way to hedge your portfolio during inflationary environment, because of this. I'll be using a crude oil and copper to explain this point. As you can see, crude oil, their prices are increasing since after COVID, and so is copper. And so with a higher price, naturally the producers of these commodities will be able to charge a higher price for their goods, and they will be able to achieve higher profit margin. Okay, you can say that their cost will increase too, but if let's say their cost were to increase, let's say around 10%, the increase in prices is more than 100%. I'm not sure if you can see here, but yeah. So the increase in the prices of their goods will definitely be able to offset the increase in cost, which is why I find that commodities is a great way to protect from inflation. Now, as to how you guys can gain exposure to commodities, I'll be introducing 3 ETFs for all of you that you can consider. Okay, one of them is the Global X Lithium Battery. As the name suggests, its main focus is on the lithium battery. And over the years, they have positive growth except for the 1 month period. Why? Because of the Chinese regulatory issue. A significant portion of the fund is in China. I'll show you the geographical allocation later on. Yeah, so this explains the negative return for the 1 month period, but the rest are positive. As for the inception date, it's a rather old fund. 23rd July, AUM $4 billion, expense ratio 75%. Yeah. Okay, then I'll move on to the sector allocation. The top 3 allocations are chemicals, electrical components, and mining. I'll give you a few seconds to look at it. Yeah. Okay, then yeah, here is the geographical allocation. As I mentioned just now, right? Over half of the fund is in China. So you can see there's a huge concentration risk here. Yeah. And yeah, which led to the negative return for the 1 month period because there was a broad market sell-off, right? Investors were afraid of the Chinese market in the past month. Yeah. Okay. Then as for those who don't want to be exposed too much to the Chinese market, then this fund is for you. This fund has a lower exposure to the Chinese market, but you can see 1 month 0 returns. It shows that they still have holdings in China. Okay, it's a newer fund as compared to the previous one. AUM significantly lower, expense ratio 0.59%, and yeah, over the years, positive return except when the regulatory issue hits. Here's the sector allocation. Mining, top 3 are mining, auto manufacturers, and electrical components. Okay, then yeah, here's the geographical allocation. China 29% as compared to the previous fund 50%. So there's a huge reduction in Chinese in terms of investment in China here. Yeah, so the top 3 are China, US, and Australia. Okay. Okay, now is the last fund. This fund is by FlexShares Morningstar. This is for those who think that renewables won't be coming so soon and still believe in the oil and gas industry. Then you can consider this fund. Yeah, over the years, positive, except for the 1 year mark. This happened because of the drop in price in oil price. Yeah, for the past 1 year, which is why there's a negative return over here. So inception date, September 22nd, 2011, AUM 5 over billion. Expense ratio 0.46%. Moving on to the sector allocation, we have the top 3 as oil and gas, mining, and chemicals. Okay. Yep. This is a geographical allocation, US, Canada, UK. Yeah, for those who don't know, out of Middle East, out of the region of Middle East, the other top few oil producing countries are actually US and Canada, and also Russia. All right. Yeah. Okay, so here is the summary of ETFs. The first 2 funds are mainly focusing on lithium batteries, and the first one is has a huge component in China. The other one has lesser. While the third fund is for those who want to invest in the oil and gas sector. Okay, that's for ETF. Okay, then now I'll be talking about our August 2021 top traded counters. For those who want to read more, you can actually go to our opponent's website. There's a market journal tab. You can go in and look for it. Yeah, for this journal is based on what counters our investors actually invest on, and we actually pick 10 of them to write, like, give a brief intro of like what happened during the month of August that affected the stock price of that particular share. Yeah, so I'll be touching on 3 of them. They are C Limited, AMD, and also Palantir. Okay, first I'll be talking about C Limited. Okay, C Limited is a consumer internet company that is based in Singapore. Some companies that's under C are Garena, Shopee, and C Money. You guys should be familiar with them. And the revenue for their second quarter was 2.3 billion. That's 160% growth from the last quarter. However, they are still in the red. They incurred an increase in loss. This is mainly because of sales and marketing. But analysts believe that in 2022, they'll start becoming profitable. Then moving to their technical analysis, you can see very obviously that it's a very obvious bull trend. It's going up. And there's a resistance of $345, support 331. And yeah, to gain more upset, you have C will need to break through this resistance. Right. Okay, that's it. And next will be AMD. AMD is a chip developed semicon products. They are used for processing. Some of you may be even using their computer chips in your desktop or laptops. Okay, yeah, for second quarter, their revenue grew 99%, but their net income grew by 260%. This shows that they are able to achieve economies of scale and streamline their operation in order to achieve a higher net income. Right. And another thing that they managed to do is they managed to seize a deal with Tesla. put their AMD chip into some of Tesla's car. Yeah. As for their technical analysis, they are sort of in a range. They're sort of in a range, and we don't really see much movement here. The resistance is around 112. The support is 103. Yeah. This is for AMD. Next, the last counter we will be talking about is Palantir. Palantir is a data analytics company, and as a saying goes that data is the new oil. Yeah, and especially moving forward when we have more devices like Internet of Things products, will generate much more data, and this kind of company will help to process them to draw insights. Yeah, and the revenue for them, they grew by 49% year on year. And Katie Wood, if most of you don't know, she is she is the CEO of ARK Investment. She added $139 billion worth of Palantir into her fund. Yeah, and that's quite a substantial amount. And as you can see on the chart here, the chart is in a bullish trend for resistance of $27.65. Why I say this resistance, because the price is still testing this region. They have not broken away from this yet. So until he has proven that he has broke away from here, it will still remain as a resistance. And as for support, is $25-ish. Yep, and this is the region that we deem is a support for Palantir. Okay, yeah. So to find out about the rest of the counters, you can go to our market journal and find out more. Normally we have 10 of them. Yeah. Okay, yeah. So that's it. To round it up, we find that the Chinese market is very volatile, and we will prefer that investors actually look at the US instead. So yeah. Thank you. So we will now proceed to the Q&A.
Okay, I'll be answering some of your questions. So I do see that a lot of you actually, for my portion, I do see that you guys ask a lot of questions on how the law actually affects some of the stocks. How is it gonna affect the stocks, the dual listing stock in US and China? I think mainly for all these laws, especially antitrust law and data security laws, right? It's mainly affecting those that is actually establishing business with China, okay, or is incorporated in China, that are greatly affected. Okay. If you look at Baba, okay, see, because and one good example is like Tesla also somewhat also being affected by, Tesla is actually listed in US, but then but you realize that actually Tesla was also affected by this one of the law, the data security law, because apparently Tesla, the model, the cars that they manufactured, actually store some of the data or in China, and because of this, right, I think they will also have to recall some of the cars because they do not the Chinese regulator do not wish that this data, all this information is leaked out of China and to US side. Also, basically a business that is establishing in China is will be affected. And then I also do see, I think some of you asked about JD. So I think first of all, because of this personal market sentiment is that JD also deal with e-commerce. So, and it's also one of the competitor for Alibaba Group. So because of this antitrust law where it so now that got this antitrust law, Alibaba, any merchants were to work with Alibaba can now work with basically the choose one policy is basically sort of being nullified in that sense. So basically merchants that actually work with Alibaba can basically work with other platforms. So I think if you look from this perspective, then maybe some of the merchants can choose to work with JD, you see. So so you can think from this perspective that actually maybe JD in the future we can see potential growth. And then let me see. I think Let me see what are the questions. So is it safe to invest in the shares in Hong Kong, in H shares, or basically those that listed in China or Hong Kong? Okay, so as mentioned, okay, during this period, it's best that we avoid the China market. Okay, as mentioned, because there's too many uncertainty within the China market because of all these regulations. Okay, now the China regulator has already dished out so many punishment, and then we are also uncertain if some of the big tech company is still under investigation. Is there going to be more news coming out to say that no, this company is being fined, that company is being fined? We are uncertain, and then because of all this, right, is really at this period that unless there's a strong confirmation. Else, I think during this period is best not to touch the China stocks for now. But of course, I think China overall economy, if you talk in long term wise, I think there's still, as in it's optimistic in that sense. Okay, if you take a look at and I think some of you asked for the fundamental target price for Tencent and Baba. So actually, if you can take a look at this table, okay, this is actually, like as mentioned just now, this is basically pulled out from the Bloomberg. Okay, so based on the analyst target price, right, the target price for Alibaba, the average target price for Alibaba Group, okay, most of the analysts deem it to be around 260 over US dollar. So Hong Kong dollar, in terms of the one that is Alibaba Group that is listed in Hong Kong, right, was around 200 over Hong Kong dollar also. Okay, so this, if you want to know the target price, maybe you can use this as reference. Then let's see what else. Then let me see what else. China, any national. Okay, so I think some of you also ask how come. Okay, I think also another thing I want to share with you guys is that the antitrust law that has been, or the fine that has been imposed to Alibaba, right? Okay, that message is also to serve as a warning in that sense to the rest of the tech companies that's in China, because this message is to tell them that no okay, the China regulator is basically they are very they're very particular about this antitrust. They want a fair competition within the industry itself, and that's why it also serves as a warning for the rest of the tech companies. Okay, then I see a question. Then okay. And Zhiqiang will also answer some of your question. Hold on.
Okay, so there's one regarding about, I mentioned that I read out the question. I mentioned that commodity is a great hedge against inflation, and steel, iron will be in great demand to build more wind turbines. But recently, iron ore prices are dropped. They dropped more than 40%, and Rio Tinto and BHP share plunge. So the attendee is asking what's the reason for the mismatch. So one very good reason can be because of the COVID. Because of COVID, everyone are not actually returning back to the workforce, and they are not able to go and continue building or scaling up their farms. So this setback actually affected the outlook of the demand for those steel and metal prices. But this in the short term. If you look at a long-term perspective, when people start going back to work, all the researchers being able to develop a higher or more efficient solar panels or wind turbine, then the pickup for all of these clean energy technology will definitely be able to pick up. They will definitely pick up, and the demand will start going back up. Yeah, okay. So there's a question about Evergrande. Yeah, so it was a big hoo-ha last Monday. So Monday blues, and it came in when the market started open, everything was in the red. So yeah, so Evergrande was a huge thing. Was a huge thing last week, and we can still feel it this week. And why is it such a? For those who don't know, Evergrande is one of the biggest property developer in China, and for the property sector in China, it holds is about 25% of China's GDP. So why the Evergrande thing issue is such a big thing is because they are over leveraged. They have lots of debt, and they are so caught they are not able to pay out the interest, which will be coming this coming month, which will be due by the end of this month. And yeah, so why is it such a big thing? Because if they were to fall, many being the property sector being like 25% of the China GDP, it actually be a huge, it will affect their industry negatively. Many people lose their savings, lose their homes, and actually affect the sentiments of investors a lot. So regarding whether the Chinese government will build them up, that is still a question mark. Because currently the Beijing government, they still quite reluctant. They are still not making much move and actually coming in to help them. And as what Jonah said, if they were to not help them, it can also, it may be a way for the Chinese government to send a message to all the big companies in China out there that they can't be too over leveraged. If you are too over leveraged, the government won't come in to help you. So you have to do your own due diligence. And another signal that the Chinese government, if they were to let Evergrande fall, is to tell the investors that look, you can't just invest your money blindly into over leveraged or highly risky companies. You have to do your own homework and invest wisely. Yeah, so that can be the two reasons why the government will let them fail. But if they were to build them up, then that will be good too. But some ways that they can actually intervene, like help them, can be through share purchase, but not directly. They can ask the banks, get the banks to lend out some monies to them, because most of the banks are state-owned. Yeah, so there's one of the way that government can do it. They can pressure the banks to go lend some money or help Evergrande to tide through this obstacle. Yeah. So I hope that answers your question. Let me look for others. Do you see a market crash coming? Okay, personally, I do not think that a market crash is coming because the last few days is just a slight correction. People are just afraid of inflation fear. If you look at the credit market, not many people are actually borrowing much yet. Yeah, so there's definitely more room for improvement. Yeah, so that is just my point of view. If you have other views, you can go ahead and share with us. Yeah, okay, yeah. There's one question. With inflation rates set to go up, the better bet is to invest in commodities. Yeah, commodity is one of the sector that can invest in. If you do not want to, you can consider another industry you can consider in as the financials. With inflation climbing up, tapering coming, interest rate going up, the banks will benefit. How? It's because when with a higher interest rate, the banks will be able to, they have more room to actually charge their customers. And traditionally, how their operation is that they lend long, so that they receive more interest, and they borrow short, so they fund their long-term loans with a lower tenure loans, and this will lower their cost. And with a higher interest rate, you will be able to get a higher profit margin. Yeah, and so as you can see from the last 2 days, yeah, despite the market being red, the financials actually, they are actually thriving because of this reason. They will actually they have more pricing power in a sense. They are able to achieve a higher profit margin. Yeah, so that is another sector that investors can look out for. Okay, yeah, I have one regarding investing in gold. Is it wise to invest in gold now? Okay, for gold, right? Gold is I would say is a precious metal. So when investors were to invest in it, they don't get any dividends, they don't or any interest, right? So under high interest rate environment, when interest rate were to go up, the value of gold will go down because you do not get any dividends. There's actually opportunity loss. The value of the money is actually getting eroded. So depends on how you think the outcome or the outlook of the market will be. Investing in gold under current condition is actually not very well. And then now so now with interest are going to rise, right? So actually investing in gold is actually not the best options. There are actually better options out there. Okay, there's one about a property stock in China. This is a rather tough industry to be in because of the Evergrande issue. If let's say one of the big boys were to fall, there will definitely be implications in the whole property sector, not only the property sector in China, but the other sectors too. They will all feel the impact. So if you want to invest in property stock in China, why not invest it in elsewhere? Yeah, elsewhere in other country will be a better bet than placing in China, unless you're able to take the risk, but it's too risky. Correct. Yeah, so that's it. Come to the end of the session. Thank you very much for coming. Yeah, thank you very much for listening to our webinar. And we look forward to see you guys again in the future. Yeah, thank you very much. And if you have any feedback, you can email us or let us know on how we can improve. Yeah, thank you very much. Goodbye.